Imagine waking up 6 months from now, and Bitcoin's broken past $150,000 while everyone who sold at $100,000 is sitting on the sidelines, crying into their cold brew. Or maybe the opposite, price collapses to $80,000, and the crowd that shouted to the moon just learned the moon has gravity. Either way, the next 6 months will be brutal, brilliant, and wildly profitable for the few who actually understand what's happening beneath the noise. Let's cut through the nonsense. No hype, no hopium. Just data, momentum, and cold-blooded analysis of what's driving Bitcoin right now. Right now, Bitcoin sits around $104,000, a level that looks boring on the surface, but underneath it's a battlefield. On one side, you've got ETF inflows, macro easing, and a supply shock after the halving. On the other, you've got nervous investors, profit-taking miners, and the Federal Reserve playing psychological warfare with rate expectations. Think of it like a coiled spring. The energy is there. It just hasn't been released yet. ETF flows are the kingmaker here. When the inflows are positive, the market behaves like a shark that's tasted blood, fast, unstoppable, hungry. But when outflows hit, everything freezes. Liquidity disappears. Traders panic. Retail dumps. Right now, flows are slightly negative, and that's why you're seeing Bitcoin grind lower on rising volume. The Federal Reserve just cut rates. The balance sheet runoff is ending. Translation, liquidity is slowly creeping back into the system. Not enough to trigger euphoria, but enough to keep the floor from collapsing. Historically, Bitcoin loves this environment. Real yields drop, the dollar weakens, and risk assets breathe again. But this time, there's a twist. The market already front-ran that liquidity. We got the party early. Now we're paying the hangover. That's why this correction isn't a disaster. It's digestion. A reset before the next leg up. The question is, how low before the whales reload? Let's go chart by chart, top to bottom. 4-hour chart. The short-term view looks ugly. Lower highs, lower lows, and momentum bleeding out like a wounded bull. RSI scraping 30. That's deep oversold territory. Historically, that's when traders who panic sold regret it the next morning. Mac's deep in the red but starting to flatten. This is where the market breathes before it bites back. Expect a short-term bounce to the $106,000 to $107,000 region, but if it fails there, we could see another flush toward $102,000. Daily chart. This is where the correction becomes obvious. Two brutal red candles slice through $106,000 support. RSI at 35 bruised, not broken. Volumes rising on the sell-off, classic mid-cycle washout. Translation, this is fear, not collapse. Buyers will come back once the smoke clears. Weekly chart. Here's where it gets interesting. The weekly trend is still intact. Price is comfortably above the 20-week EMA, sitting near $95,000. RSI's neutral, MACD just turned bearish. It's not capitulation, it's rotation. Funds are de-risking, not fleeing. If we see $97,000 to $100,000 hold over the next few weeks, that's your springboard for Q1. Lose that zone, and you open the door to a retest near $88,000. Monthly chart. This is the boss level. The macro trend is still up. RSI's at 62, cooling off but still strong. The mac's positive, long-term momentum alive and well. This is where serious money doesn't panic. It accumulates. And as long as Bitcoin holds above $96,000 on a monthly close, the long-term uptrend stays bulletproof. The market's mood right now, pure fear. Crypto's fear and greed index is sitting around 21. That's extreme fear, the kind of level where the best trades usually hide. ETF flows? Negative last week. Futures funding? Slightly positive. That's a weird mix. Cautious traders hedging, Deegan still trying to long the dip. Open interest has dropped, which means leverage has washed out. That's good. It clears the landmines before the next move. Option skew? Neutral to slightly defensive. Nobody's betting hard on the upside yet, which ironically makes the upside more likely. When everyone's scared, rallies tend to surprise. So where could we be heading over the next 6 months? Let's play out 3 scenarios. Base case. The market stabilizes around $100,000. ETF inflows slowly return, and macro liquidity drips back into risk assets. We grind higher, not in a straight line, but a messy staircase toward $120,000 to $130,000 by spring. That's the most probable outcome. Controlled volatility, not moonshots. Bull case. If the Fed cuts twice by April and the dollar loses ground, Bitcoin re-enters the mania zone. ETF flows spike, miners stop selling, and long-term holders turn buyers again. That's when the headlines go wild. Price between $150,000 and $200,000 isn't fantasy. It's just leverage plus liquidity. Bear case. The Fed stays hawkish, yields spike, and ETF outflows accelerate. In that case, Bitcoin bleeds to $90,000, maybe even $80,000. That would trigger capitulation and ironically set up the best buying opportunity of 2026. Now here's what most traders get wrong. They stare at the price. They chase every candle. But Bitcoin doesn't reward emotion, it punishes it. The pros watch flows, rates, and long-term holder behavior. The amateurs watch TikTok. Look at long-term holder supply. It's been distributing lightly into strength. That's normal after a big rally. But once those coins stop moving, it signals the next accumulation phase. When that flips, when LTH supply turns positive again, the next rally won't wait for permission. The market won't send you a calendar invite that says, breakout starting. It just rips, and the crowd says, I'll buy the dip. Except there won't be one. If you're a short-term trader, you're living in the 4-hour and daily charts. You buy the blood near $102,000 to $103,000 and sell the panic spikes into $107,000 to $110,000. But you stops. This isn't a playground. If you're a swing trader, your line in the sand is $97,000. Hold that, and the macro bull's alive. Lose it, and the market heads for a cleansing. If you're a long-term investor, you don't need to overthink it. As long as Bitcoin's above $96,000 on a monthly close, history says the next 6 months favor the upside. Because Bitcoin doesn't just follow charts. It follows cycles of liquidity, fear, and greed, and right now, fear's peaking. That's exactly when the next rally begins quietly, while everyone else tweets, dead market. This correction? It's not the end of the bull run, it's the intermission. A reset before the next liquidity wave hits. The real story isn't the candles, it's what's happening behind them. Miners adjusting to post-halving economics. Institutions waiting for volatility to calm before reloading ETFs. Central banks quietly cutting, one by one. And every macro dip in real yields adds pressure to the system. Bitcoin's not reacting to hype, it's reacting to math. And math always wins eventually. So here's the million-dollar question. 6 months from now, May 2026, where will Bitcoin be? My projection? Somewhere between fear and madness. Base path, $120,000 to $130,000. Bull path, $150,000 to $200,000. Bear path, $80,000 to $90,000. But here's the twist. It's not the price that matters. It's whether you survive the volatility long enough to benefit from it. Most traders won't. They'll sell too soon or buy too late. The winners will be the ones who kept their heads while everyone else lost theirs. Bitcoin has never rewarded the impatient. Every major rally in history started when sentiment was awful, when funding was neutral, when the crowd said it's over. That's where we are right now. The herd's nervous. The charts are bloody. The ETF headlines are ugly. Perfect conditions for the next trapdoor or the next explosion. So if you're watching this wondering, should I buy or sell? The real question is, can you handle being early? Because by the time the mainstream media tells you it's safe to buy again, the price won't be $104,000. It'll be $150,000, and you'll be the liquidity. Trade smart. Stay disciplined. And remember, Bitcoin doesn't reward fear. It rewards conviction, backed by data, not dopamine. This is where the next chapter begins. And when it happens, you'll remember this moment, when everyone was scared, volume was red, and you had the chance to think like a professional, not panic like the crowd. Subscribe because next week, I'm revealing the single most important on-chain metric that front-runs every Bitcoin bull cycle before it happens.